Hi, everybody. Welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury. And today I'd like to talk to you about the stock market and if I should be investing in the stock market. Now, a lot of people have asked themselves, and they've obviously heard the news that, the stock market's going to crash. And if we remember in mid-March earlier this year, the stock market hit its low. And then since then, about 4 months later, we've completely rebounded in the market. And the real answer to that question is there is no crystal ball. So if you're someone interested in investing in the stock market, you don't know quite how to get started, and you're excited. You've heard obviously, the amount of returns online and all these YouTubers and people who sort of flaunt their P&L statements. Uh, the real answer is there's never a wrong time to get started in the stock market. You can always make money in the stock market. I know that there are a lot of different strategies, and we won't be able to go through everything in this video, but just understand that if you are wanting to be a day trader is someone who buys and sells typically the same stock in the same day. Someone who is an investor is someone who purchases a stock with the intention of a long-term hold. So anything that you buy today and you don't sell on the same day would be considered an investment. Now, some people will think, well, I was planning on investing in like an Amazon or an Apple or Tesla. And we know that those stocks have skyrocketed over the years, and Tesla most recently has like quadrupled in the last few months. And the ceiling is hard to define. Where is the proper way to enter in any of these stocks? A lot of people will just throw the dice, right? And they'll just go in and they'll hope and pray that the stock goes up. So that is an investor. A trader is someone who comes in and out of a stock with an understanding of where the entry point is, where an exit point is, and what the risk is. And that's the fundamental key that I would definitely love to highlight and recommend to everyone is to have a risk management plan. If a stock does not go the direction that you want it to go, to cut it off and you can always get back in. I, for one, am not a personal fan of investing long term in the stock market unless it's a certain type of stock. For example, SiriusXM, 2 years ago, decided to get back into that stock after many years. I have switched on and off out of the stock market. After the crash in earlier this year in mid-March, that stock came right back to the levels I bought it 2 years ago. So if you're someone who says, well, I believe in long-term investing, and then the market crashes or comes down, and you see that the levels that you bought that stock 2, 3, 4, or 5 years ago is back, you've essentially netted zero on your investment. So none of us are in investing to make $0. Okay? So when we're investing in the stock market, we're looking for some type of rate of return. We're looking for some type of strategy that will get us to our goals. So the first thing that you need to think about is one, to develop, are you going to be a day trader or are you going to be a long-term investor? If you want to be a day trader, majority of brokers require you to invest at least $25,000. If you have less than $25,000, you can still day trade, but you have to have a cash account. So for example, if let's say you have $10,000 of cash in your bank account, you're able to day trade, but just understand that when you buy and sell a stock, that it will take 2 to 3 days once you've sold the stock for the cash to sort of settle back into your account. So you can't simply buy a stock, sell a stock, buy a stock, sell a stock, and then assume that that money is going to be right there once you sell it. It'll actually take 2 to 3 days. Now, if you have $25,000 and you qualify for what we call a margin account, where your lender, your broker will actually give you additional funds to trade with, you can actually buy and sell multiple times and still be able to use that margin to continue to trade. Okay, so decide what your risk management strategy is going to be. Decide if you want to be an investor or a trader, and decide ultimately how much money are you willing to risk or lose. So for example, if you have, for example, $10,000 in the bank account, are you willing to put it all on the line? Or maybe it might be a safer bet to take out $500 or $1,000. Most brokers require at least a $500 account to get started. Okay. One of the brokers I'd like to recommend that I was personally involved with for about 12 years when I started trading at the age of 25 back in 2008 is this guy right here. It's TD Ameritrade. So TD Ameritrade Used to be a broker that I used until most recently. I did recently switch, and we'll save that for another episode. So TD Ameritrade used to charge commissions, and if most people have heard of Robinhood, that's been kind of the average retail trader, mainly the millennials that use Robinhood, developed this free commission, no cost to trade, and all other brokers started to follow suit. When a trend starts to develop, obviously they need to follow that. Now, the downside to using TD Ameritrade and a lot of brokers that don't charge commission is you have to ask yourself, well, how are they actually making their money, right? So if you're using TD Ameritrade and they've just lost the 6, 7, $8, whatever they used to charge for commission per trade. So if I buy a stock, they charge, and if I sell that same stock, they charge me money. If they've lost that avenue for revenue, then how are they making their money? So a lot of traders who are, let's say, in the long-term category, this won't really affect you. But if you're someone who's a day trader, we'll talk more about this in future episodes. This might be something that could affect you, and then we'll talk about that why. So for this video, I did want to mention that TD Ameritrade is definitely someone I would recommend. And another thing a lot of traders tell me they do is they actually trade on the actual website. So they log into some website and then they trade on the page itself versus a platform. What's a platform? A platform is simply just a program that you can use to trade. And TD Ameritrade's famous to know that they have a platform called Thinkorswim. You may have heard of it. It has sort of a fancy name there. You can actually download it on TD Ameritrade. So once you've opened up an account with them, you can actually download this platform. I actually have the platform open. I just wanted to briefly go through it. So the platform looks like this. It doesn't necessarily open like this, so I'll definitely kind of go back and talk about how to start and sort of set up TD Ameritrade and an account and how something should look like. But essentially you have sort of a summary of your account, a watch list. So these are stocks that you're personally watching that you're interested in. And then you have what I find is a lot of traders don't use, what I call the level 2. It's very, very popular amongst day traders, and we'll talk more about what the level 2 is. We also have a quick chart here, and we'll talk about chart reading and what exactly all of this means and for a investor and a trader. And then we also have news, right? So a lot of times when we're day trading stocks or long-term investing stocks, that stock is affected primarily by news. Is there positive news? Is there corruption news? Is there financial news? Were their earnings great? Were their earnings over expectations? So what we want to know is how great is this company going to be to us? If I invest in the stock, obviously I ideally like it to go up if I'm a long-term investor. So the news is going to be real important. And the nice thing about TD Ameritrade's Thinkorswim platform is there's no monthly fees. So once you have $500 and you can open up an account, you can actually get this program absolutely free, which is really cool. So one of the things that we'll talk about when we dive more into the platform is the chart reading. We'll talk about what the candlestick platforms mean, and then we'll also talk about different time studies and different charts. So for example, this is a 5-minute time frame. A 5-minute time frame means it's basically telling me each candle represents 5 minutes of that stock. So for example, if this candle is green and it's a 5-minute candle, what it's telling me is right here that I can see that the low of that stock is $15.58 and the high of that stock is $17.78. Now someone's going to say, well, that sounds like it's a $2 move in 5 minutes. That's definitely a stock I want to get invested in, right? So a lot of times when people say you can't make money in the stock market, we'll take a look at this chart. This is actually a 20-minute time frame. So here's a stock that traded yesterday called WIMI. It had some news, a news catalyst here that came out, and it started trading from, it looks like it was probably about $3 to $4 before yesterday, Friday, July 10th. And all of a sudden it came up. So it's what we call a gap up, where it gaps up during the pre-market and the post-market from the day before. And then when it opens in the market, there's this gap from the day it traded, which was down here before, and then how it opened the next day. So there's this massive gap up. And a lot of times you might have heard of something called a pump and dump, right? A pump and dump is when we take a bunch of people rush into a stock, they jack up the price, and then they sell it and they dump the stock, and therefore the value goes up and it just jumps back down. But in this case, you can actually see this stock got pushed up all the way up here and it actually kept its value. And I was watching this one closely yesterday, and what I noticed was, and this is the 1 minute time frame. So each of these candles represents a minute. So what I want to do is zoom in here. What I realized was down here, and this is at Pacific Standard Time. So this is about an hour, a little over an hour before the market closes. We're trading at $9. And this is a time that there are people out there called short sellers, or what they do is they'll actually sell the stock to you, and then they'll actually, which is actually borrowing it from their broker, and then what they're going to do is they're actually going to buy it back at a lower price to cover their position. So a short seller borrows a stock, buys it at a lower cost, and that difference is their profit. So a lot of shorts were actually getting into the stock probably about an hour thinking that this thing was going to flush down. I personally didn't see any type of trigger that would indicate that this thing was actually going to trade downward. And sure enough, it actually popped up above one of its quarterly pivots, and we'll talk more about obviously what that means in a future video. And as this thing kind of went up, you could imagine if you're a short seller and you were sort of imagining that this thing was going to come down and it's coming up, you have to cover your position, right? Because if you buy a stock at a certain level and it goes above that level and you're a short seller, you're now losing money. Versus a long position, which is someone who buys and invests and hopes the stock goes up, you're making money. The short seller is actually losing money. And what happened was, as this thing was getting closer to close, now this is 12:30. This is half an hour before close. This stock was only right over $10, but I could already see that there was a squeeze. So you can see these green bars represent a volume, and you can see that the volume was actually picking up, and it was actually like this right here is 846,000 shares were traded in 1 minute, right? So as each of these candles represents a significant amount of like 500,000 to 1 million trades happening, or volume of shares trading every minute. So this thing jumped from 9 to 10 to 11 to 12. And as we got closer and closer to closing, you can see the volume was strong, and it jumped all the way from 9 all the way up here and closed at 1463. So that is like a 50+% return in about an hour. So how many CDs, how many investments are going to give you a 50% return? Now, I'm not saying that everybody should jump on these opportunities, and I'm not saying every stock's going to do this opportunity. But if you had, let's say, this stock in your portfolio once a month or even once every 6 months, and you put, some type of investment and got 50% return, right? That you don't need to have this type of opportunity every single day. So, is there a good time to invest in the stock market? Yes. Are there bad times in the market? Yes. Can you make money anytime, any day in the market? The answer is yes. There's always an opportunity. There's always a stock. There's always something blowing up. So what was more interesting was actually what happened in post market. So when most people thought, again, that this would be the top, all of a sudden, as the market closed, you're still allowed to trade. Certain brokers will allow you to trade. TD Ameritrade is one of them. And this stock went from 14 to 15 to 16, all the way up to 2369. I believe it was 2 hours. It looks like it was, 2 hour, about 2:15 Pacific Standard Time on Friday. Went all the way up to 2369. This was a $9 stock at 11:45 a.m., a little over an hour before the market closed, and went all the way up to $24. So now we're talking about a 150% return in about 3 hours. How would you like that? So again, when people talk down about the market, they talk down about the opportunities. What I would say is that you can always make money doing something. And the reason why I wanted to just briefly show you the platform is this is a very common platform to use. And like I said, what we'll do is we'll actually kind of go through each of these charts and some of these technical indicators, and we'll talk about how to place sort of an order in one of these platforms. So again, TD Ameritrade, it's called Thinkorswim. You can download it, you can open it, you can also watch some tutorials on through Thinkorswim. And like I said, I'd like to just sort of intro you guys into the stock market. For some of you guys who are debating about getting into it, definitely highly encourage it. And look forward to the next video where we'll dive more into the platform and investing in stocks. All right, guys, that's all I have for you today. Have a good day. Take care. Thank you.